Welcome to our fourth and final panel for the day. Dr. Redouane just presented a talk on sustainable revenue economics with GOAT. Thank you so much, Dr. Redouane, for that talk. But for this panel, we'll be focusing on the specific economic models needed to enable a scalable Bitcoin ecosystem. We're very excited to have our panelists, Dr. Redouane from GOAT, Orkun from Citrea, Clayton from Babylon, and also Trey from Alpin join us here today to discuss about the different models that incentivize both builders and users without having to compromise Bitcoin's core principles. So we'll focus the discussion on designing sustainable revenue generation strategies for Bitcoin's layer 2 frameworks, dive into more details about fee structures, token-based incentives, yield generation mechanisms, and also the potential for any kind of new economic primitives that preserve trustlessness and decentralization within Bitcoin. All of our panelists here today are major contributors within the Bitcoin space and have many perspectives to share with all of us. So I'm very excited to have this discussion with all of you. But I'm wondering if we can first start off with each of the panelists introducing yourselves and describing your project's revenue model approach and how it fits into the scalability mechanisms in your projects. How about we start off with Trey?
Hey everybody, my name's Trey. I work at Alpin Labs on our roll-up Strata. We are still in our DevNet phase, almost approaching testnet. And so the most obvious way that like revenue collection comes in Strata is from bridging. And this is due to the way that the BitVM bridge model works. There requires some amount of fronting of funds in order to make the bridging happen to layer 1. But those bridging operations are actually, we don't expect them to happen very often. We actually expect them to only happen with large reallocations of liquidity. And so actually, we expect that individual user transactions will be done through a secondary bridging service where liquidity providers essentially do the other half of an atomic swap to do small amounts servicing faster individual user operations. And so this, what they're essentially collecting revenue from is accepting the risk of price slippage between the small operations back and forth versus the larger amounts of Bitcoin that they can move in and out. And this also isn't just for payments in and out of Strata to Bitcoin layer 1, but this is also payments into Lightning, interoperating between Lightning and Strata, and transfers across other bridges to other chains. And we expect that the same pool of liquidity being dynamically reallocated as the capital flows happen, that's like the most obvious source of revenue that people can collect through Strata. And we expect that others will arise as we build out the ecosystem.
Thank you, Trey. Orkun, would you like to go next?
Yeah, sure. Hi, everyone. I'm Orkun. I'm one of the co-founders of Citrea. Been building it for more than 2 years, I guess. And I think product-wise, what Strata and Alpin is building is almost like similar to us, besides implementation details, obviously. But mechanism-wise, we are building a BitVM-based bridge, which basically allows people with like some fixed amount of Bitcoin still under research to deposit to the chain and then withdraw later. And during the withdrawal phase, like Trey said, like it's not a thing that will happen often, but even though there's fee, there are like different paths a user or LP can follow there, like an optimistic payout mechanism or like an operator covered payout. So there are like kind of different ways going out from the bridge depending on the liveness of the bridge operators. But in general, yes, there's like a unique bridge between Bitcoin L1 and Citrea than other, let's say, Ethereum L2s. And in the rollup itself, there is obviously the sequencer prover, like privileged roles for now, which is basically operating the rollup, hopefully until they become mature. And like we hope it's a bug free so that we allow people to run it as well. But yeah, essentially it's a rollup like a virtual blockchain that's running with sequencer and prover right now with a set of bridge operators and verifiers who is basically helping for the liquidity and putting some light clients or like basically fraud proofs on Bitcoin L1.
Thank you, Orkun. Dr. Redouane, would you like to go next?
Yeah. Nice meeting all of you, Orkun, Triad, and Clayton. First time I've seen you guys, and pleasure to be in the same panel. I think I've just talked about some of the things they just mentioned right now. We are the GOAT network. Just had to introduce. My name is Redouane. I'm a professor at the University of Toronto, full-time prof since 2011. Before that, I was a prof at the University of Iowa. I done a lot of work in finance and blockchain since 2014 as running the Institute of the Blockchain at the University of Toronto. We are similar in some aspect. We are different in others, from what I heard from Alpen and Citrea representative. The BitVM2 comes up as an important aspect of what we are building. We already have a playground for people to see how we are building it, but I have a take on this one. For me personally, I think BitVM, that's my view. BitVM alone is too costly, can never be implemented economically, can never be efficiently economic for the model if you want to do all the transaction. If you rely only on technology, it's going to be too expensive, because if you inherit exactly the security of BTC, then your L2 is going to be too expensive, and it's going to be too expensive, difficult actually to use. If you're actually having an L2 that is already too expensive, then what's the point of L2 to start with? It means economics has to play a big role. This is truly what I've been doing for many, many years right now, is how do we make the implementation of BitVM using decentralized sequencers, not having one. If you have one, you cannot do it. You centralize, you can actually not make that the whole challenging process and the one-end assumption actually to make any sense, because now you have to rely on a lot of cost for any transactions. What we try to do in GOAT, and I think this is kind of one of the important aspects of it compared to what I hear, is that relying the fact that you can play the competition across the sequencers, or as my colleague Kilic, Orkun was saying, the operators. I like the use of the word operators better, as he mentioned. The operators can have multiple roles, and one of the roles is sequencing, and one of the roles is validation, one of the roles is this. And if you have multiple roles played by all of the multiple sequencers, now you can allow competition on roles. And the reason for each one of them to be chosen to do the most expensive role, which is actually what they don't want, you want to make sure that you increase the likelihood for each one of them to benefit from the MAV if they do the roles in the BitVM. That's point number one. Point number two that we actually care a lot about is who is going to be doing the challenge at what time? Is the challenge one net assumption? Could we actually allow one of them actually to do it, even if they're going to be expensive each time, or we actually allow anybody to be able to do it? We implement BitVM the way it is actually done, but I think we are doing it in a certain, I think, nice way by allowing not every one Satoshi to be validated, but allowing operators to take some of the tranche. If you ever done finance, or any one of you that know they heard about the CDO tranching, we say one tranche that actually can be borne by one of the parties, and they can reimburse it, and they're only going to have to be reimbursing, like, let's say 100 instead of doing one. Instead of validating one and incurring all the costs of the validation, all the costs of the challenge, we actually going to incur it only when there is some amount already being reimbursed. And why the person will have, or why the operator will have this incentive, is because the operator want to be chosen to do the things that they get the MAV later. It means competition, change of roles, create a possibility for implementing BitVM, in our case, in a cheaper way that could be sustainable without jeopardizing the security, because in this case, the security is only on 100 Satoshi, let's say, for one operator, and that operator is willing to provide that insurance because they're willing to be chosen. It means what I'm trying to say is that economics in addition to security, not just security. This is, I think, what is a little bit, hopefully it was clear.
Yeah, thank you so much, Dr. Redouane. I definitely want to emphasize on both optimizing for the economics and the security. Clayton, would you like to introduce yourself?
Yeah, hi, I'm Clayton. I'm head of BD at Babylon. I think, compared to what everyone else mentioned in their introductions, we're taking kind of a different approach in our go-to-market, in the sense of, we're not necessarily looking to build economics natively on the Bitcoin network, so to speak, but we are trying to export the value of Bitcoin security as well as liquidity to other ecosystems. So maybe this topic gets a little deep in the weeds on something that's not our core focus, at least for the foreseeable future. But at least on the bridging side of things, that's something that we're actively working on. But ultimately, our goal is recognizing that Bitcoin as an asset class is the largest, most widely held crypto asset in the space. But most of its activity exists on centralized exchanges because you can't do a lot of exotic things outside of send receive natively on the Bitcoin network currently. And so our staking functionality allows people to, quote unquote, bridge these assets over to places that already have vibrant ecosystems, but maybe not have the Bitcoin liquidity that you would expect compared to other assets that currently exist within those ecosystems. So yeah, happy to be here.
Thank you so much, everyone, for all of your introductions. I wanted to start off a bit about a discussion on some of the fee structures that we can anticipate taking place or that we see as most promising. How can layer 2 solutions on Bitcoin implement fee structures that are both user-friendly and also sustainable for long-term operations? Should transaction fees be distributed among network participants to incentivize maintenance and further development of the infrastructure? What approaches can we take to ensure that fair distribution of fees? I just wanted to start the discussion a bit about some of your perspectives relating to fee structures on Bitcoin L2s.
Makes sense. Yeah, I can start quickly. Actually, just to clarify maybe something I said before, because when I heard Clayton talk, it just reminded me. I think the problem we're trying to solve is also similar. We're not changing anything in Bitcoin. Maybe somebody misunderstood. We're actually using the security of the Bitcoin, and we're trying to solve the problem that many Bitcoins are idle and the Bitcoin needs to generate yield. Except for Goat, it's important to remember we're doing it both for Bitcoin and Dogecoin right now. We're trying to solve this problem both for Doge and Bitcoin, and we're trying to have our own ecosystem because we think that's going to answer the question that Alice was asking. This is the reason I start from it, is because we're saying, okay, we want users, we want BTC holders and Doge holders to get something, and we want them to participate into the security of our network by providing their Dogecoin and their BTC coin. Fine. Then how do I do it? I need to pay them. I need to give them. I need to channel all these fees that you talked about, which is in your second part of the question. At Goat, what do we do? To simplify, me, I'm a user. I come into Goat. I choose which sequencer I want to actually put or which operator. You like Kilic, still Orkun idea name. I choose which operator I'm going to basically stake or generate yield from. I stake there. When I stake in one of these, every fees that get actually come into my ecosystem, not from a different ecosystem, anything that comes to my ecosystem, whatever they're going to use in my ecosystem, whatever transaction get generated in my ecosystem, those fees are paid in BTC, and they're going to go to these retail investors or miners or whatever you think about those guys or whales or whatever, how much you have, and they channel themselves to become yield and tokenized yield for these users. So one of the things we think of fees are going to be distributed to the people providing security to the network. And who are these people providing security? Not just the whales, anyone who has Bitcoin or Doge to stake in one of these sequencers. And the reason we think it's going to be sustainable is because if I only have one party that is going to deliver that party have the stick to decide how much it's going to share. But when we have multiple parties, they have no choice but to not coordinate and sharing the maximum possible from these fees. Means, Alice, in a nutshell, our ecosystem is for the retail who comes to become sequencers. Whenever come in, get distributed, not by the niceness of the heart of the sequencers, is by the competition across the sequencers that actually provide the security of the network.
Maybe I can jump in here because there are two different things that we have been discussing. While meaning Bitcoin security, there's two different things. One is obviously the network, the security of the network, and the other is the security coming from the value of the asset, which is BTC. I think in this case, like staking Bitcoin for sequencer, or like just Babylon does staking Bitcoin for anything, like secure anything, it's essentially using the value of the assets BTC, but building a rollup on Bitcoin, just like we do, is not specifically relevant with the value of BTC as the asset or like the market cap of the Bitcoin, but it's more about the security of the network. Obviously, it's very related with the value of the token, because like if the miners are not mining the network, then the network is not so secure, and their incentive to mine the network is they're getting fees in Bitcoin and they're getting subsidized with block rewards. This is, I think, one relevant point to make. Like, while talking about this, we should probably clarify whether it's a BTC security or like the Bitcoin network security, even though they're relevant. And in addition to that, is I don't necessarily agree with the term that like BTC needs yield. I don't think any asset needs yield. Like Ethereum probably needs more yield than Bitcoin because it's already like a non-limited supply asset, unlike Bitcoin. So in order to get not diluted, you ideally stake your ETH and then get some yield from being block production, so you are not diluted by others. But in Bitcoin, if you are holding BTC, then you are equally diluted with others because there's limited supply and there's nothing else that you can do with your BTC in protocol. So I don't, like I said, necessarily agree with BTC needs yield. Obviously, it's better if Bitcoin has yield as the asset, but if not, then that's also fine. I think more important is Bitcoin network should live more than enough so that the Bitcoin can actually become a self-sustainable ecosystem itself. We are talking about making like these L2 sustainable, but mainly Bitcoin needs to be sustainable so that all of us can actually build something useful. And the way of doing it is paying fees to Bitcoin miners so that they have incentive to mine Bitcoin, because in a couple of years, like not obviously a couple of years, but in tens of years, then Bitcoin fee reward will become zero. And then all of the Bitcoin miners will either depend on the transaction fees or we will fork Bitcoin and add more tail emission or whatever. But eventually people need to use Bitcoin. This can be directly happen, or this can be indirectly happen, for example, through rollups. If you use rollup, you still contribute to the Bitcoin fees, which eventually making the life of Bitcoin longer, which becomes making Bitcoin sustainable. So I think it's more important to first make Bitcoin sustainable than trying to make these L2 sustainable, because it's basically the foundation. And then it probably makes sense to talk about making these ecosystems sustainable in the longer run than Bitcoin.
Yeah, and branching off of that, I really want to emphasize it's not just enough to have a sophisticated model for revenue collection and distribution. If you have a very fancy model that lets you stake your Bitcoin and delegate it to some sequencer and collect a proportion of that revenue, that's great. But the actual that if that's all the network is and there's no organic economic activity happening on the network, then there's not actually going to be any revenue to generate from in the first place. And so for me, the biggest single use case is just payments. If we look at the total like landscape of financial transactions that can exist, if we measure just by quantity and not by volume, the significant majority of those are just simple payments. And so that's what Bitcoin was originally envisioned as. It's branched out into a whole bunch of wild different things, and the ecosystem has grown far beyond that. But ultimately, like all of this should be circling back around to being a more sustainable payments platform. And whether that's Bitcoin or if that's synthetic stablecoins that are derived from Bitcoin and people are paying each other in tokens that approximate the dollar, that is really for me like the long-term goal that we should have, and then build everything else on top of that. Because payments are still, we've come a long way, but there's still not really a solved problem in the crypto ecosystem, in my opinion.
I agree.
Absolutely. Thank you, Trey. Clayton, do you have any more thoughts to add?
I'm good on this one.
Okay, sounds great.
Just,
Yeah,
Alice, just one thing. I actually agree with both of them in a sense that, you need a thriving ecosystem. If you have zero to share, you share in zero. That's what Trade was saying. You need transaction in order to share. The question here is building a sustainable growth model. That's something we have to do, and it's something that we're working on. But is payment the only thing or the main thing? That's a question mark. The question that I'm having trouble with is the idea that we don't need yield. I do agree with everything that Orkun said in terms of we need to split it into two types of securities, as we are doing, the security of the network itself and the security itself on the proof of stake. But not thinking of yield in the long run is a little bit of a problem, at least in my opinion. In my humble opinion, if institutions are in the business, of course, if you expect to make 10x and 100x, you have to sustain. But if you really try to think in terms of fine, there is nothing else. One of the reasons why we hate gold in a portfolio, actually, and this is my job in real life for many years, is because it's not generating as it doesn't generate anything. The idea of gold is just becoming this hedge to inflationary and monetary payment. And then we have never used the idea of digital gold because Bitcoin is digital. I think one of the things I was always thinking, and when I talk to institutions especially, is that collateral management comes up every time they want something in the balance sheet, they want it to generate something. But it means it's okay that people have different opinion for sure. But to me, I'm on the angle that, of course, we want to maintain the whole Bitcoin itself because the miner need to get paid on it. But at some point, the small retail, the small institutions, when they have it in their treasury, it's very compelling argument for them to make money. But I don't know. This is just maybe my bias coming from the traditional business more that is showing here.
I
Maybe
mean, like
just a bias.
define making money. Like, is it making money in
Yield.
terms of USD?
No.
Yield,
In
okay,
terms of BTC. In terms of BTC. If you have BTC and you make something in terms of cuckoo, then cuckoo is not really a yield. The cuckoo can go to zero. If you have a token called cuckoo and you generate cuckoo, and then cuckoo can go down, then you're making zero out of cuckoo. But the reason why I hammer is that you want your BTC to generate BTC. And this is what that I think people want, at least for people I talk to. And it could be, again, is a bias. I think every asset that doesn't generate dividend, that doesn't generate, is kind of doomed to play only the role of gold, while it doesn't play the role of digital gold. That's the whole. But in BTC.
Yeah, thank you, Dr. Redouane, especially for mentioning that. Yeah, absolutely. Especially for mentioning that this is our first time with dealing with digital gold, not just gold. And I think as what you, Orkun, Trey, and Dr. Redouane, you mentioned that it's very essential right now to strive towards making Bitcoin as a self-sustainable ecosystem. And as you say, Orkun, but it's more of a priority before making L2 sustainable by itself. So that's definitely the direction that we should focus in. I'm also wondering if we can speak a bit more about some of the methods, specifically balancing user affordability with sufficient revenue for any of these operators or validators on Bitcoin. I'm also wondering if we can compare these Bitcoin L2s to some of our learnings that we have in other ecosystems like Ethereum. How do the economic models for Bitcoin L2s compare to those used in Ethereum? Are there any kinds of lessons that Bitcoin L2s can learn from, or do they require fundamentally different approaches here?
Yeah, I mean, I think we're not in the position to where we need to be spending a lot of time in terms of like what makes a sustainable Bitcoin L2, right? It's like no one is actively using them at scale. I think this entire like industry, at least on the Bitcoin side of things, is in a bootstrapping phase. And you have to acknowledge that 99.9% of proof of stake networks and even proof of work networks have some sort of inflation mechanism attached to their economic model. So like just pure revenue from transaction fees and usage of these protocols is not going to work unless there's like some early bootstrapping mechanism, whether it's in the form of like a token that you're releasing to incentivize like validators and stakers and liquidity providers or otherwise. And acknowledging that like, Bitcoin, Ethereum, Solana, all of these like widely used networks had like very, very high like inflation schedules out the gate to kind of like lock this initial validator set or operator set into the system. I used to work at a staking provider called Figment. We would add a bunch of networks on a yearly basis. We would remove ones that became unprofitable. Obviously, you need to think about sustainability over time, especially if like, you know, you're paying, you know, a group of operators and stakers in the form of a native token that, you know, is dependent on speculation in the market and you know, its usage beyond just staking and payments for decentralization efforts of the protocol. But like outside of that, right, it's like you kind of have to look at the network you're launching and see it similar as like, you know, going to market with a traditional web 2 company, right? It's like, how much are you willing to incentivize like the early adoption of this protocol, similar to like cost per acquisition for like net new customer in the web 2 space. But then like, how valuable is your product to you know, carve out a mode and make sure that they stay there and actually start generating real revenue slowly over time. But back to like the initial question, like I don't really think we need to be thinking about sustainability. We just need to like, you know, try to make bets on what is a curve, you know, for these like emissions over time, and acknowledging that, you know, that the curve can likely, you know, be smaller than previous protocols just because there is like general adoption in the space currently, right? So it doesn't have to be like this 20-40 year, you know, curve that, you know, maybe Ethereum has, or like, you know, Bitcoin, for example, is like 100 years. It can be much smaller than that.
Yeah, absolutely. Thank you, Clayton. Anyone else have any other thoughts they'd like to share? All right. And you mentioned a bit about this, Clayton, and someone else previously, but I wanted to look more into like token incentivization and their roles. Can we speak a little bit more on the roles that individual project tokens can play in incentivizing participation in these L2 networks, and how these tokens can be designed to avoid centralization? I also wanted to hear more about some of the potential drawbacks and limitations that exist with these kinds of incentives, and if there's a possibility in the use of them conflicting with the Bitcoin ethos.
I think in general, it's kind of like a bit risky thing where these incentives should be on balance. Like they're very great flywheels, I believe, to just create the initial, like the bootstrapping of the like sustainable ecosystems. But especially I think last cycle we saw this on like Cosmos chains where the inflations get extremely high to like keep the validator set, and then the failure of the creating a sustainable economics on the layer, and then the value all leaked and they're all sold and like left. I think there's like probably a good sweet spot between just like disincentivizing people to put to get yields and then just like getting a lot of inflation and diluting holders unnecessarily. So I think in general, extra token incentives are kind of useful for flywheel, but they're 99% very dangerous. If you're a retail, even if you just put and like get some of the inflation, someone getting more inflation because they have more tokens than you. So I think in general, it's very hard thing to create an economics around it. I like basically how when I talk with the founder of Babylon, they would say he basically mentioned that like the yields, the people looking to get yield on their Bitcoin, their expectations are really, really low than other tokens, so that they can use actually Bitcoin and then they can get additional yield to it. I think it generally makes sense to get those yield to Bitcoin because the expectations is low, but still the problem is that yield should be sustainable enough so that it's not also like an inflationary thing where multiple supply side infra projects just inflate their tokens and give yield to the Bitcoiners, and eventually they all go to zero.
Yeah, and it's important to keep those flows balanced. Like if you're depending on a stream of tokens or however it works being issued to ecosystem builders, then the kinds of builders that you're going to be collecting are people that are going to be optimizing around trying to collect those rewards for building in the ecosystem, and eventually the ecosystem becomes dependent on those rewards continuing to flow. So eventually, when it becomes time to take another handoff and let it run more independently, then a lot of those, maybe not all of them, but a lot of those builders are probably going to leave and go somewhere else that hasn't taken that handoff and is continuing to pump up the ecosystem. So it's really important to us that we build an ecosystem that is sustainable and independently, whether that's profitable for people building within it or equitable and independently sustainable. And you know, one way of helping that along is by making that reward be dependent on the future activity of the network. So one idea that's been floated in various circles that we're also considering is having some kind of split from the sequencing revenue, with some kind of governance structure. So part of the revenue for sequencing goes to the sequencer and all of the other parties involved there, and part of the revenue goes into some kind of pool that gets allocated at future intervals. We haven't really decided on any specifics like that, but it's a reasonably good idea, I think.
I think that's something similar to what Red was talking about. I think it's this idea is almost like you think it happens everywhere. It's like any insurance, any insurance to in the US, or I don't know about, at least the one that I know the most about, which is like basically there's always a fraction of whatever yield you have, it goes to some pool and it's used later on. And I think we do this to incentivize people. I do agree with everybody saying that you cannot rely on handouts. We have the same thing. Our token, our unit of measurement is BTC. You get yield in BTC, but the GOAT token is a boosting and a governance one. It means you basically boost your return, because the likelihood for a sequencer to be chosen to do the activities depend also on how much GOAT you have. It means that's boosting. And also it depends on how much GOAT you have in your POS when you actually create a block. And it means it's a boosting and a governance one. I want to come back to something. I don't know. We said that this is sustainability is for the future. I don't know if it's only me, or I think we are into a field that is going to be like, if you do just very simple math, like this field, and now is, they say it's crowded, but it's going to be the whole area of people generating yield and real yield. It's going to be, in my opinion, growing like crazy. Like that's actually my suggestion, my honest opinion about the future, that people will, like, at some point when they stop thinking they're going to make 100x of their BTC, at some point people will stop having some crazy expectations. And I think Orkun have hammered the point when he say the BTC holder may actually ask less yield. I may even say maybe not today yet, but it's going to happen. At some point, it's going to happen when it's going to become institutionalized, because you're going to have it in treasury, you're going to have it in sovereign, and those are expecting T-bills and expecting something that is not even double digit. When we're going to become realistic, I think a winner take all. This is an area for which people wanted to have something in Bitcoin, and all these coins that are going to float around needs to play the role in incentivizing how much more Bitcoin you will get, how much more stability you will get, rather than talking to an institution and tell them you're going to get a cuckoo token or a this is token. For them, they always have in mind, well, they're going to go to zero and I'm not going to get anything. It means they need to see the value in something real, a real currency, and the real currency of the internet is Bitcoin. It means my claim is we need this more than Ethereum. In Ethereum, it's around, the layer 2 Ethereum is around 70 billion last time I checked, which is around, if you do the fraction, what is the Ethereum versus the L2s in Ethereum, you do some kind of simple math for BTC. We are not programmable. We need the L2 even more than Ethereum. You're going to realize that we are tapping into a bigger market. Not for today, because today the expectation is very, very high to double, triple, do everything. But it's going to come. At some point, people will have realistic expectations. At some people will be looking at what is the real yield that can generate of this investment. When that time will come, that's when I think there is a winner take all in this. And winner take all doesn't mean one. It means a bunch of one. It's an oligopoly. And I think we all here, like Citrea, Babylon, Alpan, Goat, we are working on something interesting. We are doing it in a different way, but I think this is going to be an exciting, in my opinion, area to work on. That's my honest opinion.
Yeah, thank you so much. And I really appreciate, Dr. Redouane, when you mentioned about the need to kind of show that real value attached. And I wanted to go into some more about ensuring that these economic models are robust against any kind of potential exploitation exploitative behavior. So Orkun, you mentioned we need to find that kind of sweet spot, and Trey, you also mentioned that it's very important to keep these flows balanced, and many may try to optimize for the amount of rewards to collect. It's very important for us to build an independently sustainable ecosystem here. But I'm curious to hear your thoughts on how we can ensure that these economic models, these structures are robust against any kind of potential malicious behavior while still encouraging broad participation from the users.
One word: decentralization. Decentralizations of all the operators' activities and competition across them. That's the main thing. You let go your decentralization, you create in no competition, you have a monopoly, you have a failing system. You're gonna survive it with airdrop, and then it's gonna disappear, and later on everybody will take and it will die. Create competition, you create value for the users. One-on-one economics, nothing more, which Bitcoin already have done.
Yeah, I think similarly, like we want to go not too slowly, but we want to avoid rushing to market really quickly, because if you go too fast, then the ecosystem can't develop organically. Like, I think you could make an argument that the only really decentralized coin that was ever created was Bitcoin, because it developed organically all the way back in 2009. That does mean there's whales, because there's some people that got in early, but it means that there's still a much wider distribution. And so continuing on with that pattern, like, we have to make sure that we don't rush into market and single players can establish themselves in a particular part of it. And that does mean that we're going to have to be doing a little bit of hand-holding for a while to make sure that we do it correctly. So it's kind of hard to avoid that, but especially if we talk about governance to be able to manage how upgrades are going to work, we don't want it to be where it's just us deciding, yeah, or let's push the button on this governance upgrade. We'll have to do that at the beginning probably, but that's not like a happy outcome for us in the end. We want to encourage decentralization, and that's very important priority for us.
Yeah, absolutely. Decentralization is key here. But just as the last question before we close, I'm wondering if you all can speak about some of the strategies that we can use to ensure that these revenue generation models on Bitcoin L2s don't compromise the network security, decentralization, resistance to centralization. Any kinds of closing thoughts to this discussion? Any last takeaways you'd like to mention about?
I think in general, the only thing that matters for me in the even the longer run, but especially immediately, is the app layer, what's actually useful things built here and what people can actually use to generate, because so far we have been just talking about not in the view of user, but actually holder maybe, but the user may hold only Bitcoin, no token else, and they want to use these, but they need to use, they should want to use these applications so that they actually create the revenue. And it's just the most important thing here is to build useful applications for real people, so that they actually use your platform, and then you can move from there. I think, yes, decentralizing your sequencer prover, decentralizing everything is good, but yeah, I generally agree with Trey that no one should rush into this, especially if you are building something that's actually want to be trust minimized, such as if you have ZK proofs, just like what we do. Immediately decentralizing your sequencer and prover is probably not the greatest idea, because most of these systems are still very early stage. Your code bases, the ZKVM code bases, everything is still very, very early stage. So you like to be fault proof for some time, and this can compromise from decentralization for a while, which I think is fine. And meanwhile, those applications can be built and they can see the signs of PMF, or they can pivot to something else. And once we reach to a stage where we can also have the decentralization as well as the real applications, I think that's the end goal for almost all of us in here. And it is definitely the end goal for us.
I think think I agree. I think decentralization in stage start with whitelisted and we continue the goal. I think I agree with almost everything that has been said. You have to focus on users, and our strategy, at least, you can say that in order to have users, we have managed now to do. We not only actually generating yield for BTC, but we add the Doge community. And one of the reasons we add the Doge community is because they have nowhere out now to generate yield, and that's a decentralized community. And we think by bringing other communities to create more transactions is very useful. If they have a place where they can generate yield, it can help it can cross-subsidize, that's the term. Basically, you're creating cross-subsidization across teams because the purpose is to generate yield in a currency that is actually valid for all. This is, I think, what we're going with right now. We're going with both BTC and Doge. And I will say, to me, this is the reason for success, or the strategy of success is not just the application. This is what I deviate. Bitcoiners cares a lot about security, but security at an efficient cost. If the cost is exorbitant, you have nothing else to give because it takes you so much in order to give that inheritance of security. This is why, while one part seems to have less sequencers is better because of you're just trying to improve in terms of your ZK, on the other hand, the more operator you have, the less cost to generate security because the operator role can actually switch and you can implement BitVM in a very cheaper manner. This is why I think there is now a trade-off. Decentralization is not a sin anymore, is not a costly thing anymore. In a decentralization becomes something that would allow less cost, not allow more cost. If you do it in a certain way that is smart, I think, and reasonable. And I think all the people here are super smart for sure. If they think about it twice, it's, oh, yeah, shit, this is true. Because there are multiple roles and each one can play a role. That's going to be cheaper because we have diversification of roles. I think this is one of the unique things that is coming up in L2s. And the good news is the market is huge and we're going to learn from each other. And it's going to be hopefully a very good area of work. I'm excited about it, truly.
Yeah, I think at least for us, we're not necessarily getting in the way of how Bitcoin network operates currently, just because I mean the staking functionality exists natively on the Bitcoin network. Our slashing functionality does as well. But ultimately, to the point I was saying before, like we're exporting this security and liquidity to other ecosystems. Way that like Vitalik said, like don't disrupt Ethereum's underlying consensus when Eigenlayer was coming to market. It's like we're not necessarily getting in the way of anything that's happening natively on the Bitcoin network in that regard. But we are acknowledging some truths and trying to combine these into our overall strategy, go to market, and vision, right? Like we know that people want Bitcoin yield, both institutional and retail, specifically if you're looking at like BlockFi and stuff in the past. And we know that people like actively want to trade other assets on chain, right? So ultimately the bet is how do we get more Bitcoin yield like in a decentralized way, and also like offer Bitcoin as a tradable asset on more decentralized rails, since like over 85 to 90% of trading activity currently with Bitcoin is existing on centralized exchanges.
Yeah, and someone whose opinion I respect a lot told me that the financial system should be something that just hums along in the background and most people don't have to pay too much attention to. If you look at like what happens, if you really look into what happens in the background to make it so that when you swipe your credit card, the payment just happens, it's an immense amount of infrastructure that's very complicated and was built over many years. But from the point of use, you just swipe it or chip and pin it, whatever, and you see approved and it works, and
Fully
that's
agree.
how it should feel. That's how it should feel. And that kind of infrastructure doesn't let people build things that 100x in a month. That still happens. You just need different infrastructure for it. But that's not sustainable. It's not sustainable for things to 100x in a month, because if you 100x every month for 12 months, you've blown it up past the number of people in the world. So that's long term how we should see it, and there's still a lot of opportunity for growth between now and then, but from the point of use, it shouldn't be complicated and fancy. Thanks, everybody.
Yeah, absolutely. But yeah, thank you so much, everyone. Orkun, really appreciate your points on trying to optimize for decentralization, for building those real applications. And then Dr. Redouane, you mentioned about the focus not just on applications, but also on the security side. And Trey, about your point about striving towards the goal, making financial systems just come along in the background, something that shouldn't have to be like thought about it just as seamless as, say, swiping your credit card. Those are all really great points. And Clayton, with your focus on exporting liquidity to not just on Bitcoin, but to other ecosystems as well, that all sounds really great. And I think a big takeaway from here is that it's not enough to just have a model or structure for, say, revenue collection for fee distribution, but it's essential to make Bitcoin an independently self-sustainable ecosystem first. And that's, I think, a vision and a goal that we're all striving towards. So I appreciate all the insights from all of you guys today, and hope to see you next time.
Thank you. Thank you, everyone. Appreciate
Thank you so much.
Thank you.
Bye.
Thanks.
Have a
Bye.
nice weekend, everybody.
Thanks, everyone. What a great panel for the last one of the conference. I appreciate everyone's